Today I'll be showing you a very easy option strategy that you can set up for a stock that doesn't move very much. With the market we have currently, that is pretty rare considering a lot of these stocks are moving a lot just because of the volatility of the market currently. But for this example, I'll be showing you on AT&T, which is a pretty flat stock. If you watch right here, you can see the movement as I pass through. So it doesn't move very much. It drops to about 50 cents, 60 cents for a second. Mainly just minus 50 cents. Come over to a week. You can see it doesn't really move all that much. On the chart it's moving a lot, but over here it's just moving like a couple dimes. So for this example, I'll be showing you on AT&T. So we come over here to trade AT&T options. So this is a very easy one to set up. First off though, with AT&T, we are going to be selling calls and puts. So you want to come over here to nasdaq.com and we're going to search ticker symbol T. Oh, didn't get to click it. So we're going to click right here. We're going to see when they have, where is it? Not that one. So we're going to come back to AT&T. We're going to look at their earnings and their dividend yield. So we're going to see when their dividend is coming up. So we come over here. We found AT&T. So now we click on dividend history right here on the left side. So we're going to look at the ex-dividend date. So they do have dividends every 3 months. I'm recording this on August 20th, so we do have time before the next dividend. So make sure you take note of this. Do not sell options near dividend date or you will risk assignment. But after we just check that, we're in the clear, so we'll come back to AT&T. So what we're going to do is we're going to set our expiration date first. So set it as close as you want if you're going to set this up the way that I'm about to show you. So for this example, I'll set it as close as I can. We're going to sell a call where we think AT&T will be at on August 27th. So let's just say I think AT&T will just be right here on the $27 point. So we're going to sell a call here. Then you should see something like this, and it should say short call right here. Now we're going to sell a put at the same spot, this $27 point. So now you should see something like this triangle. And so with this, you can see our max profit right here. If it ends up at exactly $27, which is the one we chose, then we will keep our premium of $73 that they give us to put this in place. So they'll give you $74 to put this into place. That's why it says total credit. They give you the money to put this in place. But you want to do this with a stock that doesn't move very much because your max loss is limited with this strategy. So let's say AT&T falls to what, $25.50, you lose about $70. So you want to do this with a stock that trades pretty sideways, and you want to set your expiration date as close as you can so that it doesn't have much time to sink a lot or rise a lot. So for this, I'll show you. We'll sell this one right here. So now you can see we raised it up a little bit. So now AT&T sits right here currently. So now we think that AT&T will rise a little bit. So that's where you'd put it above the share price. So if we come over here, we can visualize this a little bit better. This is called a short straddle. So come over here to optionstrat.com, click build, come over here to short straddle. We're going to enter T for AT&T, which is the one we chose. Make sure you choose the correct expiration date. So we're going to come back here and we're going to copy this little layout right here. So we sold a $28 put. Red is sell, P for P, $28. And then we sold a $28 call. $28 call right there. So now, if we visualize this, we can see exactly what this will look like in day by day. So the 23rd is when the market will reopen. AT&T has to be sitting around these points for us to make this amount of money. On the 24th, it'll have to sit around here, and you can see exactly what it has to do for us to make exactly the dollars. And then you see right here is the expiration date. But again, the max loss is infinite. So be careful about that. If you think that AT&T will move a lot, then you can lose, a couple $100, but that's pretty unrealistic considering AT&T doesn't move all that much. But I would be careful. There are other strategies that you can check out where you can limit the max loss with a pretty similar setup like this. Let's set it up the other way. Let's set it up with the $27. So we'll move that there, move that there. So now if it drops a little bit, you can start to see what it'll look like. So I always recommend you come over here to Option Strat to check out exactly how this will look day by day. But if you'd like to check out my channel for other options trading strategies, you can. I would love to have you over there. Subscribe if you enjoy this type of content. I post this stuff about every day. Comment if you have any questions down below, and I'll be sure to answer them all. And as always, thank you for watching.